Jeff Sica with us this Monday morning. All right, Jeff, the market's up, bank stocks are up. Is this the calm before maybe a storm?
Well, I would consider last week about as calming as getting waterboarded or getting tasered. So I wouldn't think it was calm when we're sitting at the precipice of what could have been massive bank failures, when the Fed had to step in. Janet Yellen, who I consider the most incoherent person alive, had to step in and assure us that the Fed would guarantee most deposits. That was a big step. And then also to have Jerome Powell raise interest rates, yet say he's a hawk, but act like a dove. And that's exactly what he did last week.
Is this the calm before a storm?
I believe it is, and here's the reason why.
So the storm is coming?
The storm is coming because here you have, I don't believe we're going to have bank collapses like people fear, but banks are going to tighten lending, they're going to pull in liquidity, and that is going to cut off the lifeline to a lot of businesses. The banks supply the liquidity for businesses to grow. Number one. Number two, you also have the consumer. The consumer has gotten kicked in the teeth. The savings rate are among the lowest since the financial crisis, and also the credit card debt is the highest on record, with some of the highest interest rates on record. So the consumer is affected, and corporate earnings have to scale down. So I believe this was a quick fix. I think it was a sugar high. I think we got to be very, very cautious going forward.